Hi, welcome to Market in a Minute. We can't disappoint our viewers. Got to talk about college football to start with. I really think the Buckeyes look really strong to repeat. They're starting to get the running game together. Incredible defense, and you cannot stop that passing game. I think Georgia looks like the team to meet in the finals. I don't think Indiana can compete, and totally unimpressed with Texas A&M. Sorry, guys, but the Buckeyes look really good. So the Bears are in control of this tape at this point, and on Wednesday, Nvidia reports Nvidia can change that a little bit, but I think it's going to be difficult because the CEO has been out there pumping up the expectations. So they're going to have to really cement that outlook for 2026 to get this stock going. And sometimes just things just fall into your lap. So we've owned Anavex. I really like it. This is a gift. If you don't own this stock, this is just a gift from the shorts. The shorts don't follow this company the way we do. We know this company in and out, and I'm going to take you through that path they're going to have for approval of their Alzheimer's drug. Market update. Okay, we don't see buyers rushing in anymore, and I think there's several reasons. So the sentiment has changed, and it's not changed enough to put in a bottom. The sentiment is now 49% bears and only roughly 31% bulls. And last time we had a bottom in the market, it got to about 62% earlier this year. So it's not enough yet, but the sentiment's negative. Buyers are just not buying the market at this point. They're not buying into the dips. We'll see. Wednesday's a big day, as I mentioned. So here are the factors that investors are thinking about. Is the Federal Reserve's been pushing this no cut in December. That's disappointing. I think they really need to cut in December. They have room to cut, but they're leaning to not cutting as to what they're putting out at this point. The data center growth is not slowing down, but the stocks are, right? CoreWeave, really disappointing quarter. The stock's been crushed. So that's an indication. Oracle, we mentioned again last week as well. That's well below what it was prior to announcing the OpenAI deal. There's excessive valuations in the overall technology sector. And not only overvaluations, but the ownership of these stocks is way overowned. So you got a big overowned group of stocks. They need to be shocked at this point with much better than expected fundamentals, and I don't think we're going to get that. There's a big bear market in Bitcoin. I don't know if you've been watching this. And Michael Saylor's company, Strategy, the stock was 450. Now it's down to 195. That's a house of cards. What this company does is just simply buys Bitcoin. And Bitcoin is going down, and the technicals of Bitcoin do not look good. Their average cost for Strategy is roughly $74,000 per Bitcoin. If it breaks that level, I think you can see the 195 maybe go down to 95. So very concerning. There's over $3 trillion in cryptocurrencies. So could it impact the economy? Yeah, clearly. $3 trillion. If you lose a trillion and a half to $2 trillion from this point, it's definitely going to have an impact on the stock market, impact on investors that are levered up. So got to watch this. This is an issue. Shiller PE. This is a long-term chart of the Shiller PE, and you can see here the high back in 1929, 1930, got to over 30 times PE. I kind of discard all that. Modern times though, we've seen that above 40. We're right there. We're really at 39 times earnings. So Shiller PE is basically just takes a moving average of the business, taking out the business cycle of past 10 years. So it's not a great short-term predictor of the markets, but it's a element that gives you a sense of what the valuations are in the markets currently. So the markets are 22, 23 times next 12 months earnings. That's high. We got to 24, 25 during the tech bubble. As we've said over and over again, we've got a valuation problem for the overall stock market, especially the mega cap technology stocks, and they're starting to waffle. So again, NVIDIA needs to be good on Wednesday. So we're looking at the healthcare stocks. We've been talking about this. So remember, we put out, this is probably a few months ago, how undervalued the healthcare sector was on a relative basis, all-time low in terms of valuations versus the overall stock market. We think as growth investors seek things outside of technology, they're going to come into the growth sector, and others as well, but come into the healthcare sector. So the healthcare sector just naturally has growth to it. Granted, there were some issues in the healthcare space, but the cloud's starting to lift, especially for the drug companies. So several drug companies come out and said, we're going to lower prices. We're going to go direct to the consumer, use Trump RX, and keep the prices, bring the prices down, particularly for the GLP-1 drugs. So keep the prices down to make it more affordable. So, there's less pressure now on the drug companies because Trump's kind of getting his way on bringing down prices. It's a good thing. So now investors are starting to understand what the impact is from these lower prices. So we think that the drug companies, large drug companies buying into the biotechnology space to refill their pipeline is really beneficial to the biotechnology companies, in particular smaller biotechnology companies. So we think momentum's coming back into the space, and what's going to benefit initially is probably the larger biotechnology companies. Then it's going to filter its way down. So you got a group that we specialize in doing analysis of these companies that's probably going to heat up in a big way as we go into the new year. So this is the Magnificent Seven here, okay? So it's outperformed nicely, boom, until recently. So the Mag 7 is up roughly 18% through Friday, up 18% versus up 27% now, up 27% for the biotechnology index. So we're seeing this starting to outperform. Again, I like this group, and we're going to talk about probably a really interesting way to play that with Anavex. NVIDIA. So I mentioned they report Wednesday. This is kind of how we look at things. So what's the expectations in the stock? Here is the revenues reported for the past 9 quarters. Okay, you can see that they've reported roughly a 4 to 5 billion increase per quarter sequentially. So back in, as an example, back in second quarter 2024, they had a $6 billion increase. As these numbers get larger, okay, the growth is starting to slow down. But as we go through time, they've been consistently at 4 to 5 billion per quarter. Boom, last quarter, second quarter, they were only 2.7. That's a miss. They missed the whisper number. They hit expectations, consensus, but they missed the whisper number. Now the consensus is for 54.6 versus 46.7. Okay, that's a big increase. That's 8 billion. So NVIDIA guided to make up what they missed last quarter, plus the normal 4 to 5 billion per quarter increase. So we're thinking what needs to be done to keep the street happy is 1 to 2 billion above this number, above 8. So roughly $55.5 billion in revenues to keep everybody happy. Now, this CEO has been out there pumping up 2026 expectations. I always find that very dangerous when they really start to pump up expectations for a year out. So they're looking at 54% growth in next year versus only 41% growth this year. So consensus growth for next year, rather. Let me repeat that. So the CEO's out there looking for 54% growth for 2026. The consensus is 41%. Why in the world he's pumping it up so much, I'm not sure. Maybe to keep the sentiment in the stock positive. So that's 15 billion more than the 5 billion per quarter, right? So if it increases 5 billion per quarter, they need 15 billion more for next year to keep that to hit that 54% growth rate. So I think what's happening is the CEO of NVIDIA, he's killing the upside. So what you generally have is after 6 quarters, Wall Street usually figures it out. So we're past that level. Wall Street's figured out the growth rate of this company. Now this CEO is pushing it higher. Now look at the technicals. So we got a buying opportunity here back in April. Started to break back above the 20-day, the 50-day, the 100-day. As you know, we like to see this trend. We love to buy them when they're below the 20-day, then pop above the 50-day and 100-day, above the 200-day, and then the stock had a nice run. Now it's starting to waffle around the 50-day moving average. The 50-day moving average is a really good moving average to follow. So September, it broke a little bit, broke it again, and now it's back down to the 50-day moving average. If it doesn't hold here and they don't have a good quarter, don't have something that really kind of shocks the street into kind of reliving this momentum story again, I think the stock comes back down here to the 200-day moving average is about $150 on the stock currently. Now, as I mentioned, Anavex. This has been a wild ride, right? I really like this company's drug. We got into it a year ago, around September a year ago, around $5, and thought the story was really good. It went to 14. Okay, big move, right? Very happy with it. Then it broke back down again. Now it's down below 4. The shorts have been pounding on this. If somebody put out something on X, I'd really be appreciative of it. There's 32 million shares short of this company. They only have 85 million shares outstanding. So big short position. I think they're going to get squeezed really hard. The story hasn't changed, but the stock went down. So if we talked to the company quite a bit, we're on their calls, so we meet with them in person. It's been very consistent. Okay, what they've been saying is they're going to file this in Europe to start with, which is what they did. They want feedback from Europe. They're on the same path as what Lilly and Biogen did. So they got the feedback. The feedback was negative. Okay, really close vote. Okay, all 27 countries in Europe vote. So they're at the meeting. They voted it down. Apparently, as what I understand, apparently the person that run the meeting really focused on what's the backup. Okay, we see the cognition really good. We like it, but what's the backup? We like the drug. You need to show us something else. And usually they show everyday function, right? So the everyday function for this company doesn't work because they try to find really early stage Alzheimer's disease patients. And so you don't notice a big differential in Alzheimer's disease patients as they're just progressing into disease. With that, they also use a 1990s version, data set version, to compile the data for their study. So the newer versions to capture activities of daily living, okay, can capture the little nuances a little bit better. So I think the company kind of messed up a little bit in that regard. However, it's not required for approval. Only thing that's required is cognition. And so what the EMA is asking them to do is come back with another data point. What's the data point? The data point is the biomarker data. We believe that's what it's going to be. Maybe not, but we believe they're going to use data, the biomarker data. The biomarker data looks really good. Before I go into that, let me show you their trial results. So this is here's what you should focus on, this column here. But this is just increasing the dosage, and so really good cognition, really good dementia scores. So anything below 0.05 is clinically significant, and you can get approved on it. You can see the activities of daily living, not good. This is not clinically approvable for that. So they wanted to go to the EMA to get the questions. They got the questions. They're going to refile it. They were going to refile it with their biomarker data. The biomarker data looks great. So using shrinkage of the brain. So this is a normal brain. This is a brain on Alzheimer's disease. It has Alzheimer's disease. Big difference, big shrinkage, right? So you can see over time, different areas of the brain, they have really good clinical data, really high on the clinical data in terms of preventing that shrinkage of the brain occurring over 48 weeks. So refiling, here's what else is happening. So we think that the Trump administration wants a drug out there. This is an RFK drug all over. I mean, there's no side effects. It's oral. It's inexpensive. There's no bleeding of the brain like with the Biogen and Lilly drug. There's not all these MRIs that have to happen, but it's a simple pill, very little, if any, side effects. The side effects is dizziness. So take the pill before you go to bed at night, right? That's all you got to do. So we think that they met with the FDA. We don't know exactly what's going on there, but we think there's a collaboration between the company and the FDA to get this drug approved. So I think at some point in time, you're going to see a big announcement that they are moving forward with the FDA. Likely will not have to have a phase 3 trial. So this is what we believe. And the stock is going to go berserk to the upside. It's going to squeeze these shorts so badly. It's going to be a beautiful stock. And in terms of what it's worth, okay, so the people that have Alzheimer's disease in the U.S. and in Europe diagnosed is roughly 12 million total. It's a big market. So we think the market they fit into early Alzheimer's disease is about 2 million. So 2 million at only $10,000 per year. We think it's going to be higher, but $10,000 a year for the drug, that's $20 billion potential for these guys. Now, you can measure it differently. You can measure the whole worldwide. I think the number gets up to close to 100 million people worldwide that have some form of Alzheimer's disease. This is a very eloquent drug. What it does is it turns back on the sigma-1 cleansing. Okay, so as the crud goes through your brain at night, if it's not working, your brain's not working properly, then it doesn't get cleaned. And so this is something where a protein turns off, you just turn it back on, and it works. So I like this. Below $4, we think of the table pounding buy. I really like it. Do your own work, because it's volatile as heck, and don't put more money into it than what you can afford to lose. So if you have any questions, ping me. Come to my website, Patrick Adams, CFA. Sign up for a hard copy of Market in a Minute. We'll send that to you every week. And if you have any questions about any of our strategies, come over to PVG Asset Management. You can see all of our strategies that we manage. Thank you very much. Take care.